very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
I am Grace Agbarago. It's Tuesday, the 9th of December. We thank you for joining us at this time on the show.
All right, let's begin with your news now. Heirs Energies today hosted a landmark signing ceremony for OML 17, formalizing flare gas offtake agreements under both the NGFCP and non-NGFCP frameworks. The ceremony, held in the presence of NNPC, NUIM's representatives, approved gas off-takers and industry leaders, highlighted Heirs Energy's commitment to Nigeria's gas commercialization drive, using flare gas as a catalyst for energy, industrial growth, and shared prosperity. The signing marks a major step in advancing the National Gas Flare Commercialization Program and strengthening sustainable energy solutions across the country. Here are excerpts.
This signing ceremony cannot be more timely, especially given the global events, that affect both security, energy availability, and the issue of emission that we are all experiencing, and in particular, the issue of energy transition. We are all aware of the global call to transition to cleaner and more sustainable source of energy, both in Nigeria, in Africa, and all parts of the world, as it were. And of course, this has, it has a mismatch. It has both positive and negative. And for us, that has, in a way, created a challenge of even attracting financing into the upstream industry for us. So we have this key core mandate to do something about what energy transition, so that Nigeria could be on a better platform to be able to attract the needed investment into our oil and gas industry, as it were.
So our gas agenda is very simple. As a number of people know, we're on a mission to address Africa's energy needs. It's very simple. And we are starting with Nigeria. So MS-17 is actually the start for us, not the end or the case. And for gas, we are looking at, we have three key pillars. The first pillar is to grow the production. The second pillar is to eliminate routine flaring. And the third pillar is to expand the gas value chain. And what you will see here today, we will talk about more, is eliminating the routine flaring. However, there is a key component of catalyzing value chain expansion as a result of these agreements that we have written. But suffice it to say that you will hear more, particularly on that third pillar, from next year. So we have doubled gas production, and by doubling gas production, because most of the power plants in the east are supplied by us, we have more than tripled electricity generation in the eastern part of Nigeria.
Ethiopia and Nigeria have launched a gas by rail economic corridor project, a private sector-led initiative aimed at building a 73,500-kilometer freight railway linking 40 sub-Saharan African countries with Ethiopia as host nation. The project envisages deploying up to 470 gas turbines to create a 270-gigawatt baseload power system supported by a virtual pipeline moving 100 million tons of hydrogen fuel annually. Project documents suggest the corridor could generate more than 70 million jobs by 2050. In Congo, the Democratic Republic's franc has soared almost 29% this year, making it Africa's best performing currency against the dollar alongside Ghana's cedi. The rally has been driven by a surge in foreign currency holdings and a shift in central bank policy, pushing the franc to level with the cedi, which had held the top spot for most of 2025, according to Bloomberg data. At the Ethiopia Digital Payment Conference, the National Bank of Ethiopia's flagship annual event, stakeholders from government, finance, fintech, and development partners have gathered to discuss strategies for advancing the country's digital payment ecosystem, promoting innovation, and shaping Ethiopia's digital economy. Let's listen.
Digital payments have grown dramatically, as I said earlier, with transactions volumes increasing at triple-digit rate. 2, the Ethiopia instant payment system now anchors interoperability across institutions. 3, government services and collections have begun migrating to digital channels. 4, the regulatory framework, particularly around payments, competition, and innovation, has taken an important step forward. And 5, Ethiopia is laying the foundation for a modern digital public infrastructure, integrating payments, national ID, and digital platforms. But these achievements are not without gaps. And what are the gaps? But maybe for the gaps, let me acknowledge the critical role private sector plays, because this achievement is a partnership between a committed public sector, government, a very innovative private sector, and willing Ethiopians who are embracing new technologies.
And on the 6th of September this year, Ethiopia started trading officially under the AfCFTA and exported goods under this arrangement to other parts of the continent. Today, the launch of the National Digital Payments Strategy, as well as EthioPay, in my view, will accelerate the ability of Ethiopia to take advantage of this market of 1.4 billion people with a combined GDP of 3.4 trillion, because it aligns with the AfCFTA and what the heads of states of the African Union, the Assembly of Heads of States and Government of the African Union directed us to do. And what struck me in particular, Governor, about your statement and your vision, first, establishing a payments platform, a payment system that is modern, efficient, and cost-effective. Second, establishing and deploying that technology to enable a very important imperative, and that is digital and financial inclusion.
A key session on economic empowerment in Africa highlighted pathways to inclusive prosperity, focusing on the transformation of agriculture from smallholder peasant farming to commercial agribusinesses. Ghana's President John Mahama emphasized the need for climate-adapted practices, including affordable irrigation solutions, improved seeds, and strong extension services. They also stressed the importance of developing the agri-business sector to ensure farmers have reliable offtake for their produce, turning agriculture into a sustainable business. Here are excerpts.
For many years, Africa has relied on smallholder peasant agriculture at the expense of medium-scale to large-scale agriculture. Peasant farmers grow enough to feed their families for the year, and if it just happens that there's excess food, they go and sell it on the market, buy some other items that they need. The time has come to see agriculture as a business. Unfortunately, the Green Revolution bypassed Africa, and so Africa still has some of the most extensive arable lands, but that are not yet being put to productive use. Unfortunately, there's an intersection of what I just talked about and climate change. And so, for instance, the year before last, I have a farm that is about 400 hectares. And we grow soybean, we grow yellow maize, mostly for the poultry industry. We planted, and the crops came out very beautifully, nicely. And just at the critical time, the rain stopped for 10 weeks. And I just watched the crops wilt. And so we need to adapt our agricultural practices to the new reality. And that means that we must put more land under irrigation. Poor farmers are not going to be able to afford the kind of cost it takes to put land under irrigation. So that's where government comes in. And that's why my government has embarked on a very ambitious program of introducing irrigation, but not just any irrigation that is appropriate and affordable to the farmer. And so, for instance, I mean, if you go put some huge pumps connected to the national electricity grid, the farmers cannot pay the tariffs for pumping that water. So more solar water pumps, improved seeds, good extension advice, and especially developing the agribusiness sector, because it's not enough to ask the farmers to produce. You need to have an offtake for their production. And if you don't develop the agribusiness sector, the farmers find themselves, cropping, producing, harvesting, and there's nobody.
The African Airlines Association has announced the full operational deployment of free route airspace across Western and Central Africa effective 30 October 2025, a major milestone for the continent's aviation sector. The shift, following trials that began in November 2023, will enable airlines to fly direct user-preferred routes, improving efficiency, cutting fuel use, and reducing carbon emissions. Afrexim Bank has supported the initiative since the trial phase, aligning with ICAO's Global Air Navigation Plan. The move to full implementation follows consensus between air operators and air navigation service providers at a joint workshop in Dakar. Finally, on News Now, Canal Plus SA has completed its acquisition of the remaining shares in MultiChoice Group Limited. The delisting of MultiChoice from the Johannesburg Stock Exchange and A2X will proceed as planned on Wednesday. Canal Plus initiated the compulsory acquisition after crossing the 90% ownership threshold in October and paid shareholders 125 South African rands per share, a 67% premium over the closing price before the offer. The Paris-based media group plans to pursue a secondary inward listing on the JSE following the completion of the deal, concluding a process that began in June 2024. I am Melissa Enoch, and that's it on News Now this Tuesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates.
We are here at Africa Energy Week in 2025. First day of the event is booming everywhere. A lot of people, many stakeholders from the energy value chain.
We're here to promote the need for investments in a robust downstream sector to truly have energy security for the continent.
welcome back to Money Moves. Let's now go over to Grace for today's market review. Hello there, Grace.
Thank you, Melissa. Let's now track how the markets traded today, starting off with the equities. The NGX All-Share Index declined by 0.33%. The BROVM fell 0.38% to 351.43. The Nairobi Securities Exchange declined 1.30% to 176.80. In South Africa, the Johannesburg Stock Exchange lost 0.46%, while the Zimbabwe Stock Exchange advanced 2.34%. And in North Africa, the EGX30 edged down 0.05%. Let's do a quick round on some of the Pan-African currencies. The rand was little changed at 17.05 against the US dollar, down 0.03%. The Egyptian pound gained 0.23% to 47.57, while the CFA franc strengthened 0.12% to 563.74. The Kenyan shilling eased 0.02%. The Moroccan dirham firmed 0.09%, while the naira rose 0.27% to 1,452 naira 25 kobo. Let's switch into the commodities data deck, beginning with energy prices. Brent crude added 0.21% to $62.62, and US WTI rose 0.20% to $59. Natural gas dropped 3.56% to $4.73, and Arabian gasoline inched up 0.35% to $1.80 as at 12:58 GMT. Now, finally, two metals prices. Gold increased 0.37% to $4,233.10, while copper fell 1.40% to $5.36. Platinum rose 0.22%, aluminium declined 1.08%, and iron ore eased 0.76% as of 12:59 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Thank you very much, Grace, for giving us those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.